curious. So I always think about like the tug of war, like the increase in property prices, decrease in property prices. And you're saying there's across the data that you see, there's the 60 odd different layers to it. But if I'm understanding it, is it mostly the undersupply and immigration? That's the 250 kilo, two guys on the back of this is why property prices are increasing, and then all of the other layers? Or is there another more macro view of that?
To some degree, yes. The macro supply and demand issue is kind of like a core that I would say that's a through line that goes through many, many locations. However, if we were to look at like individual specific markets, you might find that there is a more prescient individual driver in that specific market. So, for example, if there was a location where there was a huge amount of job opportunity and also the relative affordability was better, that may be a bigger driver than, say, any kind of supply versus demand consideration in that location, right?
So, as an example, let's just say an area, can we pick one to make this more relevant? Let's say it is Bundaberg. Why not? We've referenced that one already. So Bundaberg, not an overly huge city, but let's say they build a new hospital, a university. They're going to put in, there's a new mine opening up as well. There's farms expanding and they need workers. Like there's an influx of jobs to that area. That is going to be something in this example that would enable the type of growth you're talking about, because incomes become higher, there's less supply, that will outstrip it in a way. Affordability is probably better in that region as well than, say, Sydney.
Yeah, exactly. You're hitting the nail exactly on the head. So at the core, there's three, maybe people have heard me in the past talk about things like the Holy Trinity: cash flow, growth, and value adding. There's kind of another Holy Trinity for locations, and that's jobs, lifestyle, and affordability. Pretty simply, right? Now that cascades down into a complex ecosystem of micro, factors. But broadly speaking, that's the kind of thing. Do people want to live there? Is it the kind of place they would want to live, right? Because you can have a high amount of jobs in a place that people don't want to be. That area may go up in value, but it's going to be tremendously volatile. You can have affordability, but if there's no jobs and no lifestyle, people don't want to be there. It could just be a cheap place in the middle of the desert. Nobody wants to be there. So you've got to have these kind of factors working together.
So that's like mining town, right? It's like there's a mine that's open. People all go there for the cash, but as soon as the cash windows, it's like, see ya. And so
no lifestyle.
Really classic example here. Really classic example is Port Hedland versus Broome in Western Australia. Now, I was actually in Broome recently, just last week actually, and it's quite interesting because we looked at Broome a couple of years ago when our kind of system was saying, "Hey, go buy in Broome." We couldn't validate that it had a sustainable opportunity in front of it, so we chose not to invest in that location at that time. However, now it's interesting because probably should have. And I was speaking to someone the other day, like we've never chosen the wrong location, but there's plenty of the right locations that we haven't gone into. But if you look at Broome and Port Hedland, Port Hedland is primarily a mining-driven set of circumstances, right? And so the opportunity to make a lot of money is there, but also the opportunity to lose a lot of money is there. Broome, similar part of the country, has some exposure to mining, but also has a huge exposure to things like tourism, government departments. There's a lot of government departments that are centered there and all of this kind of stuff, which stabilizes more broadly speaking the economy. And so you have these different drivers. That has a lifestyle driver. People want to be in Broome because it's beautiful and it's the kind of place that people would like to go and spend time. And so you have this kind of different balance there. Now that is also driven by an undersupply issue because there's still not enough buildings being built there relative to the amount of people who want to live there. But that is that the supply and demand side of the equation is supported by some underlying drivers, which are things like jobs, lifestyle, and affordability. Now, affordability, I just want to point out before we kind of move on from this point, is a really interesting one as well. And we've been building a suburb scoring matrix, which we're going to be releasing probably in the next couple of months. And one of those factors that we've looked at is affordability. And the way that we look at affordability is relative local affordability. So what is the median wage versus the median price? And how does that impact, or how does that reference against other locations? So for example, the median wage in Sydney versus the median wage in Bondi versus the median price in Bondi, there's probably a much larger gap in Bondi than there is in Bundaberg. And so therefore you have relative affordability, i.e. if I get a job in that location and that pays me $1,000 a week, or if I get a job in Bondi and it pays me $1,000 a week, which one is going to give me the best quality of life based on what I can afford? This is where the affordability piece comes into it. Not necessarily just what are the interest rates, but actually what is the relationship between the income I have and the lifestyle I can afford with that income.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.